This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Opec Plus compliance with oil output cuts rose to 129% in January, a source from the group told Reuters, as producers fell further behind their target and signaling a tight market that could push prices higher. OPEC Plus, which groups the Organization of the Petroleum Exporting Countries and others including Russia, is undoing output cuts put in place after the pandemic slashed demand. The group has aimed to restore an additional 400,000 barrels per day, BPD, each month since August, but not all producers have kept up with their individual targets.
The global liquefied natural gas, LNG, market is expected to remain tight this year following last year's volatility, which saw demand rise 6% and gas prices hit an all-time high, Shell said on Monday. Natural gas prices around the world soared late last year due to a combination of tightening supplies, weaker renewable power generation and a strong growth after COVID-19. The high prices we're seeing at the moment are being driven by fundamentals, low storage levels and supply uncertainty, said Steve Hill, Executive Vice President, Energy Marketing.
Moving on to the top news in the energy sector.
Oil giant Saudi Aramco is in talks with partners in China about further investments in the country, CEO Amin Nasser said on Monday. China is an important part of Aramco's base, Nasser told reporters on the sidelines of a conference in Saudi Arabia. And we are currently in discussions with a number of our partners in China for more investment, he said, declining to disclose the nature or size of potential investments. Nasser said last year that Aramco expects opportunities for further investment in downstream projects in China, the world's biggest importer of crude oil, to help the country meet its needs for heavy transport and chemicals, as well as lubricants and non-metallic materials.
India's fuel demand is likely to grow 5.5% in the next fiscal year beginning April 1, initial government estimates show, reflecting a pickup in industrial activity and mobility in Asia's third-largest economy after months of stagnation. India's fuel consumption in 2022-23, a proxy for oil demand, could rise to 214.5 million tons from the revised estimates of 203.3 million tons for the current fiscal year ending March 2022, according to government forecasts. The estimates were released on the website of the Petroleum Planning and Analysis Cell, PPAC, a unit of the Federal Oil Ministry.
Next, we have the top news in metal markets.
The Pentagon plans to boost the stockpile of rare earth minerals, cobalt and lithium it manages for the U.S. government to reduce its long-term dependence on China, two people familiar with the plan said. The new stockpile agreement guidance is expected to be announced as soon as next week, one of the people said, nearly a year after U.S. President Joe Biden issued an executive order to study U.S. supply chain resiliency in February 2021. Rare earths are often converted into magnets and used in next-generation weapons research as well as the Lockheed Martin Corp F-35 jet and Raytheon Technologies Corp precision-guided munitions.
China's state planner will take steps to stabilize the commodity market and hasten construction of new infrastructure, it said on Friday, in the effort to promote steady industrial growth. In a joint notice, the National Development and Reform Commission, NDRC, and other regulators announced 18 measures in a notice involving fiscal, financial, environmental and more policies to prop up the industrial sector in the world's second-largest economy. The NDRC said the authorities would ensure supply and stabilize prices of primary products and key raw materials, including iron ore and fertilizer. They also pledged to reinforce futures and spot market supervision of commodities and strengthen price monitoring. We will now look at the top news in the agricultural sector. The United States and the United Arab Emirates are seeking an additional $4 billion of global investment in an initiative launched last year to make agriculture resilient to climate change and reduce its emissions, a U.S. official said on Sunday. The two countries launched the Agriculture Innovation Mission for Climate, AIM for Climate, at COP26 climate talks in November, aiming for $4 billion investment from governments and non-government innovation partners between 2021 to 2025. AIM now wants $8 billion in climate-smart investment commitments by the November COP27 climate talks in Egypt. U.S. Secretary of Agriculture Thomas Vilsack told Reuters ahead of AIM's first ministerial meeting in Dubai on Monday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.